Hi guys, so this week's top-down analysis is going to be based on AUDCAD. So I asked members in the group, the mentorship group, to give me a pair that I can look at and break down the structure from a higher time frame to our entry time frame of H4 and H1. So we are going to break down the market structure of Aussie dollar against the Canadian dollar. Now, if you remember correctly, we did the same thing with AUDCAD, I think about 3-4 months ago, where we were looking for short positions on AUDCAD, and if I'm not mistaken, it's somewhere right in here where we got our short entry. Now, this was based on institutional pairing in dollar-based strength, right? Which is the same concept that I'm going to apply on this market structure breakdown. Now, it's going to be one of the concepts that I'm going to apply. So we're going to use institutional pairing in dollar-based strength. Reason being that we can see a proper reversal pattern coming into dollar index. So we're expecting higher prices in dollar index, but this bearish order block here on dollar index is going to provide us a bit of stiffness, a bit of resistance when price reaches 90.80. So now, coming back to AUDCAD, institutional pairing in dollar-based strength, if I come to my central banks, right, the interest rates, you can clearly see Aussie dollar, right, the central bank, the rates are sitting at 0.1%, 10%. That's 0.10%. And then we've got CAD, the Canadian dollar. Their rates are set at 0.25%. And using institutional pairing in dollar-based strength, when dollar is bullish, we look to sell the weakest versus the strongest foreign currency, right? So with Australian dollar having the lowest rates and Canada having the higher rates, gives us a perfect pairing of AUDCAD. You see, we are looking to sell a country's currency that has got low central bank interest rates against a country that has got higher central bank interest rates, in this case AUDCAD. So when we go to the chart, right, first things first, what do we need to do? Right, we need to break down our profile. Which price action are we going to be focusing on? That means we need to break down our 9 to 18 month market structure. So that's basically from current price up until somewhere here, this green candle here, right? That's our 18th month profile. So it's this structure here that we should be looking to break down and analyze how price has moved. So from a glance, you can clearly see from 18 months ago, we had price trade to the downside, created a low. This week here, I don't like to use weeks like that. That should be the trade wars, if I'm not mistaken. Yeah, that had that effect there. February 2020, that should have been the trade wars, if I'm not mistaken. And then we had price rally to the upside, right? Very strong bullish momentum from February 2020 up until December 2020. So now we are in June. So this is June, May, April, March, February and January. So up until December 2020, Aussie dollar was strong bullish. It had a very huge momentum going to the upside. But prior to Biden getting into office, then we saw a huge move to the downside. We've already traded this pair this year, if I'm not mistaken, and we had a very good entry point to the downside from here. Now, be that as it may, we're going to break down this structure. That means focusing in the gray shaded area, our 9 to 18th month profile. So I'm going to switch to my line chart. Now, reason being that I need to mark my extreme points in the profile, right? So we've got the high, and then we've got a low, but in between we've got this intermediate low that was broken to the downside, intermediate high that was broken to the upside, intermediate high. So that's coming in at 1015, right? And then we also have this low here. You see, now what I'm doing here, guys, is me breaking down the structure, highlighting my order flow. The reason why I use the line chart is because it gives me exact price point related to the candle close. Then we've got this short-term high that was created, which was eventually broken here to the upside. It was broken to the upside. So that was coming in at 96224. 96224. That's when we had this structure break to the upside. That was December, when December closed, and then ultimately we had these two equal highs. Now, that being said, once you have done that, right? So this is me showing you how I do my analysis, right? So once this has been mapped, right, this is our profile. Can you see this low here, the low that came in February? This should be February or January 2020. Yeah, that's March 2020. Remember, there's a huge wick here, so the line chart disregards the wick. I like to focus on the price action from the candle's body. You see, that shows me real price. Now, once you've done that, right, I'm going to get rid of this guy here. I don't need him anymore. Now, this is the profile that I'm dealing with a momentum swing to the upside, and then price retraced to the downside. There was a correction, then eventually we broke the structure again, continued with the uptrend. But now, since the beginning of this new year, right, beginning of 2021, we have seen lower prices on AUDCAD, right? We've seen huge weakness. So I'm going to switch now to my candlestick, right? The time I do that, you can clearly see this high that was broken here. It's an old bearish order block, right? This is an old bearish order block, and this is its 50% mean threshold, right? You can see how price finds resistance when it pushes in there, right? So that's an old bearish order block, which for some traders would have offered great shorting opportunities here. 346 pips, and then here it dropped. No, it opened here. This candle opened down here and pushed to the upside. Now we've got this candle here, which is our last down close candle. The range is too big. It's a monthly candle. That range is too big, but it's providing support. But now this is now where you have to go to a lower time frame. Now we've got the 18th month candle looking backwards. That's an old bearish order block again, which provided good shorting opportunities here all the way 900 pips, right, before eventually price broke through to the upside. Now, with this structure that I've marked, right, the high is coming in here. This is our last up close candle. The range is also too big for us to classify as a bearish order block here, meaning we have to go into lower time frames. And then some will say, why not this? Well, this guy is not our last up close candle. This is our last up close candle. Now, when we look at the structure here on the month again, right, we're still focusing on the monthly chart. We are breaking down the structure. We've got this low here, this low, the low of this candle coming in at 92468. 92468. Let me put my price pattern there. 92468. What lies below 92468? We've got sell stop. We've got internal range liquidity in the form of sell stops. We've got sell stops here. Right? Expect price to trade through. Now we also have price breaking down. We've got a low that was violated to the downside, another low violated to the downside. Last month's low has been violated already to the downside, and price is respecting the lower highs. We've got a high, lower high, lower high, lower high, which is not being broken, going to the upside. Now that's a clear price pattern of a market which is in a down trend. Take note. So it won't be a surprise to see June or July trading lower. You see, June has already traded lower. We have cleared the sell stops below a May's low. So we have sell stops again below 0.92468. That includes also the sell stops below the current month. Now, when you look at this price action, ultimately, where do you think price is going? These are the questions that you ask yourself. Where is my target? Right? We have already seen a pattern that's telling us AUDCAD is in bearish momentum. The structure is bearish. And remember, we are looking for a strong dollar for us to be selling AUDCAD. Right? We need a strong dollar for shorts to be valid on AUDCAD. Remember, institutional pairing in dollar-based strength. Now, looking at this structure, the old bearish order block, this gray shaded area here, was broken to the upside here, right? Can you see the high of this candle here? The high which is coming in at 91210, right? Let me mark it. Let me mark that high, 91210. 91210, and the low of this candle here. Now the low is coming in at 91623. The low is coming in at 91623. Now look at in between, the range between this low and this high. We've got a fair value gap. Now all this is on a monthly chart. I'm defining ultimately where price is likely to trade to, right? We've got a fair value gap here, right? Let me put this here so that when I go to lower time frame, it should always be visible. And this one also somewhere around here. So we've got a fair value gap. So that's basically the target if you're going to be shorting AUDCAD. Ultimately, price is going to trade lower than 92460. So we're looking at 92400, 91300 is the ultimate long-term goal on AUDCAD. 91400, 91200, 91400 is somewhere right here, right at the 50% mean threshold of our fair value gap. So AUDCAD, we are hunting for short trades based on the monthly structure breakdown. Now, from which level now are you going to be hunting for short trades? Right now, let's do this. We've got this low. Now we are defining our premium array. And then we've got this high. We've got a fair value gap. This fair value gap here. This level is going to provide resistance when price returns into this structure here. Already it has found resistance from the current high to where price is. There's like 35 pips, which is not much, but in that section of price action, this is your premium array, which you should be hunting for short trades. I hope we are together, guys, because price hasn't traded through inside this range. Market was only offering sell side liquidity, right? We've got a liquidity void here to the downside, and price continued moving lower. Now I'm gonna go on to a weekly chart. I just need this to be precise. Now this is the weekly chart, and remember this fair value gap is on a monthly chart, right? That fair value gap is going to provide resistance. Got price coming into this range and find resistance to trade lower. Now, how many pips on offer, right? If you are someone who waits for the fair value gap to be closed, you've got a potential of 200 pips to the sell stops, right? If you are someone who's gonna take a bit of risk so that when price touches the fair value gaps opening, you've got a potential of 150 pips to the downside. But remember, ultimately we're looking for price to trade all the way to 91400, which is somewhere around here, right here. That's 250 pips potentially on offer on AUDCAD. So we're looking for price to trade lower on AUDCAD with our target set at 92400, or the sell stops below 92468. I hope we are together. Now, once we are on the weekly chart, this is where you specifically define your entries. We also have this last up close candle. Now this represents our bearish order block, right? Remember, you have to react to what price action is doing, and you cannot react when you don't have the structures defined. We've got a bearish order block right here. If the fair value gap does not hold, price will likely look to trade into this fair value gap and trade lower, right? Targeting the sell stops below 92468. We also have this monthly fair value gap here, but now this is a bit far further ahead. We will need price to have a strong bullish momentum for us to consider this as a shorting position. Now I'm going to go into a daily time frame. Now on the daily time frame, you can clearly see how the monthly fair value gaps opening is providing resistance. See, price has been finding resistance here, and then it dropped 131 pips, came back here, and it dropped again. This today 48 pips, right? So this range, this fair value gap here, when you break down the structure, remember this is our daily bearish order block. You can clearly see now we've got this is our weekly bearish order block, and we have got this last up close candle here. This candle is going to provide also resistance and price would drop, but right now focus on the fair value gap for your entries. We've got buy stops above these highs. There is buy stops which are going to provide you the liquidity to trade to the downside. So I'm not going to give you any specific price points. I'll do that in the mentorship group. Here I'm just highlighting the structure which you should look out for. You can see here, this is our H4 bearish order block, which is coming in at 93914, a good shorting area for shorts down to take out the sell stops right here. So that's basically my structure breakdown, top-down analysis on AUDCAD, and I hope you have seen and understood what the structure is providing us in terms of opportunities. You can see price movements are more to the downside than to the upside. If price moves bullish on AUDCAD, it's mostly a correction or a consolidation before another expansion to the downside. So expect market to trade lower on AUDCAD. So that means shorting opportunities are ideal on AUDCAD. So yeah, that was the top-down analysis for this week, and I'll do another top-down analysis in the coming week. So I'll try to make it a weekly thing so that you guys can learn and understand the concept that I use. Last week we did just to summarize what we talked about. Last week we talked about about USD JPY. We were hunting for long entries from the 109.29 price points, and market did move to the upside. So the top-down analysis is basically me just showing you how you can analyze the market using order flow, your premium and discount arrays from the monthly chart to define your trades on lower time frames. So there's no point in bothering looking for longs on AUDCAD. We are going to see price move lower on AUDCAD. So if you're in the mentorship group, I'll be sending you entry points whenever price action has presented itself. So with that, guys, I wish you good luck and happy trading. Thank you.